So just to give a bit of background and context so you understand where I'm coming from and how I got involved in this. So I run a global equity fund focused on innovation and disruption. And that has businesses in it like Visa and MasterCard, Google, Amazon, Xero, one of the leading companies in this digitising SME accounting, and the likes, Alibaba and Tencent as well. So we've got this, if you look at our portfolio, we're pretty heavy in payments, but we've got a big interest in where the payment space actually goes. Same time, we're actually, we spent a lot of time looking at distributed ledger technology, blockchain, essentially how I met Ron and others in the research. I started actually seeing how potential changes can come about to financial services. And my history is tended as an actuary by trade. When I first came to the market, they threw me into financial services, so covering banks, etc., and the likes. But we also invested a lot in technology companies right from the beginning when I entered the market 20 years ago. So when the Libra announcement came out, we sort of knew that Facebook was doing something. It was a conversation we thought we could actually add some value to, because we saw what the actual proposal, what they're looking to try to achieve. So if you think about where financial services today, we don't have any globally scalable financial services organisations. God knows we've had 2 banks in Australia who've tried, which was NAB and ANZ, and they've actually had to retreat, but the problems associated probably are well known. And particularly when you're thinking about trying to actually get to everybody on the planet, and a lot of the investments that we actually have in the fund, the thinkings are very, very different. Those founders and people, they're actually thinking about how to solve things for 7.5 billion people, or 25 million people, and they effectively are looking, and this is what the proposal on what is actually, how can we create a globally scalable organisation that can have billions of customers to get the economics so they can get to all matters of the earth in terms of actually delivering financial services and financial inclusion. So from our perspective, the importance for Australia to be involved in the conversation is that we are substantially overweight financial services on any measure you look at it. So this conversation is very important for Australians to actually be involved in, and we kind of thought, we're wondering who would actually get involved, given the high bar that this has actually that's been set by the Libra Association. When you look at it, it's a very high bar, but while we kicked off here in Australia with the conversation, early next year, I think we're very close to announcing that we'll end up actually probably running the conversation out of the country with a government that we supported and a regulator that's going to help with the conversation, and probably end up running in the order of 5 nodes across different regions to actually get the conversation actually underway, to actually help with the conversation. So, and again, we want Australia to actually be part of that conversation. There's a simple theme that continues to resonate through our portfolios. As we digitise, we then actually tend to move to a process of democratising, because digitisation tends to move to open sort of source communities and developments, which is what this is about, an open financial system. And then you tend to demonetise as well with that as you scale it over time. You've seen a lot of examples of this, as everyone in this room's probably got who here has a Netflix subscription? Right, it's what a lot of people has a Netflix subscription. Well, you know what it was like before when Foxtel was charging you $120 a month to get all access, and suddenly, for $15, $20 a month, you're suddenly getting a whole substantial amount of value. And this is kind of what you see from the benefits of global scalability being brought into local markets. So the thing that's really interesting I find about this development is like a lot of things that are going on in the crypto space of being kind of like, as a traditional fund manager charged with prudentially taking care of your money and growing your wealth, the crypto space has been a bit of a wild ride for many. And but this is something where it's kind of I think Facebook's labelled it a cryptocurrency. That's really the technology, the way the technology is being utilised. But the reality is, it looks like we're about to create probably the lowest risk-free asset in the world, and that's actually a very significant development in its own right that potentially has implications, of course, for banking. So when I come from a banking sphere, looking at the banking capital structure, that's something that we'll actually have to get our head around as well. But the whole digital space is actually looking for something that's very safe and secure, and that's what's being presented by very simply, all this is about is actually near instant, near free global money transfer, which technically can be done. That will benefit a lot of people on the planet. And of course, there's a lot of pushback that's coming because anytime you get the social construct for money changing, which is what basically the Swiss have done, then you kind of course, everybody talks about regulatory arbitrage and we're going to impact a whole bunch of businesses. That's going to happen. Yes, I can see that. I'm a holder in Visa and MasterCard as well. Still will be remaining a holder in Visa and MasterCard even post the development of this. This will take some time to actually get off the ground. But in terms of financial inclusion, the ability to actually scale something like this and help with that solution will be pretty significant. And acknowledging there are a lot of issues that have to be resolved. I think from my perspective, when I look at this, some of the major ones that continue to come up, unfortunately, I can understand from the perspective, people think potentially threatening monetary policy. Well, I think it's, to make that assumption, it's going to be a little bit, I think we're jumping the gun a little bit too much because the size of the financial system globally is like over $65 trillion in deposits. So even if this reserve got to that Libra was managing ends up being $1 trillion, which I think is unlikely, because if that was the case, we all should be investing with into the notes in the way it's actually structured. But I think this will actually end up being complementary to the system and solve the issue that the Reserve Bank Governor got up on basically Tuesday at the payments conference and said, why are big banks actually deciding to actually transfer money in a way that is more cost effective? And this is what this actually can offer. So we see it as a regulatory conversation going on and a political conversation about this that requires a lot of education. And I come from the regulatory space, running a fund, and understanding that conversation, what needs to be had in terms of, I believe, in sort of educating people around the benefits of what this will actually bring. An open financial system looks like, to me, like we can actually solve a lot of the issues that we actually have today in financial services. And one of the biggest conversations, which is hard to understand, but from my perspective, putting my actuarial hat on and looking at financial services and banking, it's all about risk. There's the possibilities we digitise to develop lower risk financial systems. One of the issues I see today is like we're kind of in this funny zone when it comes to the incentive structures under the way monetary policy is run, how asset prices have been elevated, and how we're trying to protect our financial systems, either through compliance or through capital. The question is actually to get efficiencies going forward and to move this to allow most of the world to enable financial inclusion. We need to resolve those issues. For Australia, I can't reiterate enough, when about 1/3 of the ASX here and the largest contributor to our economy, 10% of GDP, is financial services, you'll want to be part of the conversation. So from our perspective, while we're running a payment infrastructure, it looks like, of course, it's $10 million per node. We're putting some money, we'll be looking to put some money into the reserve to actually kick things off with that. But even the node structure, the way it's actually going to be structured over time, will end up being competitive as well. It's not going to be a free lunch. It's not going to be a situation where you're going to get all these big corporates actually making money. They're actually aiming over time to actually increase the ecosystem to over 500 nodes to actually support it as we actually move forward too. So it's truly going to be looking to develop an open financial system with it. And of course, for financial services, it's very different. It's a very different conversation to move from the closed systems we have today to a more open financial system. But from a perspective of actually you can see there's a conversation coming forward where this could benefit many in society. So, and I think out of it, the economics of it, as the Swiss are starting to realise, is actually, and they're seeing and regulating the economic functionality of what blockchain can bring. And they're already seeing the economic benefits of that. Already in a society where they're seeing banking is going to change going forward. So I understand there's a lot of issues to be addressed, and what we do also appreciate is forums like this. The Libra Association are very open to actually having the conversation. To give you some more colour, you've probably seen, they started off with 28 members and it reduced to 21, with a lot of payment players actually dropping out. You can understand some of the pressure that some of those payment players are facing. So that's not from regulators, but also from their own customers, which is particularly Visa or MasterCard, that I was mentioning before, that their major customers are the banks, the card issuers, and that's the revenue at risk where this actually heads. The remittance use case is the start, and where this actually goes can go well beyond that. And of course, that's what, of course, there's always that debate when you get a structural change like this in that nature. There will be impacts on players, but also I believe there's opportunities to actually to invest and to benefit from the ecosystem as well. So if you look at Australia's case, the biggest problem that we face is physicality. We've got 5,200 branches, and from what I've seen internally, we've probably got 3,000 too many. As we digitise and as money evolves, you're going to find that that's going to be probably the biggest issue to address over time. Like for the Aussie banks, you can actually see this conversation is actually going on around the world, and this is wrapped up in this conversation as well. You probably see that since it's been announced, all the suddenly there's a whole swathe of different countries around the world talking about actually we're going to digitise our own money. This was all generated by Libra. It's actually a very good conversation, and from that perspective. And what's actually gone unknowns to a lot of people, because the media tends to pick up on the negatives but not the positives, is that the Secretary of the Treasury of the US came out last week saying we're fine with Libra to go ahead as long as it actually comply by the rules. Next year, when we actually get up and running, you'll find that there's going to be, Libra has indicated there's 180 qualifying entities that will get involved in this, and I believe that. And I think next year you'll start seeing a differentiated conversation actually coming about through the benefits. I just want to make sure Australia's involved. That's the key message to everybody here. Get the brightest, get the best in the room, actually address all the issues. I've seen this started to happen as well with Ron, I've seen Ross, others who are reading what they're actually putting out. It's just actually getting involved, it's engaging. We could actually have a leading financial system, continue our sort of our position as a leading financial system. We've got a good system. We're forward thinking, we've done some great things over time, and this is one of those things actually we can get involved in. The issue that we tend to face is that we're a small country, 25 million people, and there's a big global conversation going on. And you probably realise the geopolitics that's going on between US and China at the moment. This is what's actually driving the conversation. China's about to launch their central bank digital currency. This is a very, very big deal, bigger than what most people think. And that's the conversation, that's going to get a lot more airtime. And the US are realising that the probability of being de-dollarised is something that's actually on their mind. It's why they want to let one of their greatest innovators actually participate and actually say, come on, let's catch up. Because you look at China, right? So our team looks at China, we can see where they're heading. There's benefits to being an autocracy in many ways in terms of how you can run your economy, run the conversation, run innovation. We know that. But I just, again, I'd like to just reiterate the importance for Australia to be involved in that in that conversation. And the economics out of this could be actually beneficial for our country. And that's what we'll be looking to propose for each of the regions that we're looking to actually develop the connectivity, resolve the remittance use case, start then developing other financial services off the back of the actual platform. And one thing I'll say is I understand the issue with the messenger of Facebook and data and privacy, and this is why we want to engage the best in that conversation. But the reality is, without significant distribution, you don't bootstrap something like this. That's the problem. And I've seen plenty of payment platforms that just don't make it because you just don't have the distribution. So, and Facebook is valued at over $500 billion for a particular reason. People do value it. Now, of course, there's a big conversation going on in the US, which is about a lot of politicians actually venting, which you can understand because of what's happened. With the US election in 2016, we saw that. And of course, these issues need to be addressed. We're doing this in Australia as well, talking about how to actually address those privacy and data issues. And we, as Fabric, also want to make sure that those issues are actually addressed. So we want to have an objective conversation about the issues involved and to be involved. I think if we've got to actually a foot under the tent, we'll be there. We'll have a say in this as Australians. And actually, the conversation with Libra and Facebook that we've had, they want the support if they actually They effectively they see this region as a priority region. 600 odd million people in the Asia Pacific, and a lot of them are unbanked, big number. And so for them, this is actually a priority region in that perspective. I can understand some of the conversation here in traditional financial services land is hard because of, this looks like to me probably will end up being one of the largest regulatory arbitrages we'll ever see. But that's kind of we've got to ask ourselves the way we want to run the social contract of money. And I know that's hard, and it's hard for traditional banking and others to actually say, geez, hang on, we can run this in a more effective and efficient way. The question is, why aren't we doing as a society? Why aren't we doing it for everybody in society? And again, on the risk side, there's a big conversation to be had here over time about actually what it can benefit us as a society is actually being able to promote competition in financial services, because in some ways the way the current system is set up, and it's not to the fault of APRA or the Council of Financial Regulators, it's just that we have a concentrated financial system because we're trying to mitigate the risks that leads to concentration by its very nature. So it's kind of nice to be able to look forward and think there may be a conversation that we could have about opening up, having competition and lowering risk. And that's what's really going to drive innovation in financial services, financial inclusion. And you can kind of see it in financial services as a whole, particularly in banking, where other areas are really leading the charge. You've seen this as we globalise, we digitalise, but in financial services it's not happening. And that's what the effort here is actually to try and resolve it. So from my perspective, it's kind of like, again, we're all open to anybody with a very inquiring mind who are asking tough questions, because we want all those questions out there, and we want to be very objective about all the issues. But you're only going to be able to have a say in that if you're involved, and that's our simple perspective on it. So we're always open to be approached by anybody who's actually saying, hey, I think we can do this better, or I think we can do that better, and this is what we'll be talking to the Australian people about over the coming years, and hoping that we can actually capitalise on what looks to be a very unique epoch in time. You can see a number of factors that are coming about that kind of go, hang on, you can see this global digitalisation, you can see it coming, you can see the conversation. It's all about the evolution of money, and that's a very, very big conversation for the globe. And the more we get people engaged with it and understanding it, I think the better off we'll actually be.